One for the week. We've made it. My name is Bryce, and as always, I am joined by my equity mate, Alec. How are you?
I'm good, Bryce. I love it how we get to a Thursday afternoon.
Here we go.
And you say we're done for the week.
Clocking
really
off.
Rubbing it into everyone that has to go off to work on Friday.
Look, valid point, but look, nothing really happens on a Friday in the markets anyway, so...
Nothing happens for you because you're on the golf course.
We're closing out the week with some interesting insights from around the world in markets, and to do so we are joined by one of our good friends from Stake, Alex Barrett, the Chief Insights Officer.
Don't know if that will pass.
Oh, well, look, Alex.
It's your title now.
It's good to have you on.
Thank you. I've been following Equity Mates for years now. I think it's the first time we've actually got together to talk about anything to do with markets.
Yeah, so you run at Stake the wrap and have been doing market updates with AusBiz late last year. So you're pretty well versed in what is going on in some of the more interesting spaces around the world, in markets, in economy, in trends, you name it. And today we've got three sort of key interesting points to unpack. The first one being 13Fs.
Yeah, so late last week, all funds were required to have filed their 13F filing, and that's if you manage over $100 million in assets, you have to pretty much disclose your positions, your biggest new positions, stocks you shed from your portfolio, etc. The obvious stuff. The one that stood out to me, and I think everyone looks to it first, is Warren Buffett's Berkshire Hathaway 13F. And there were two really significant takeaways from that. And the first is that he's shed his position in gold.
Yeah.
I suppose Buffett was a critic for quite some time on gold, and he never actually took a position in physical gold, but he found ways to gain exposure through gold miners, gold producers, and Barrick Gold, ticker gold, was one of his biggest positions, and that's completely out of the portfolio now.
Bryce's theory is that he sold all his gold to buy Bitcoin, though. He's just hedging inflation in a different way.
And it's not going to show up in a 13F, is it?
Yeah, no.
So we'll never know. Yeah, it is interesting. I think just to go back a step, and this was filed when, like this quarter or the last quarter?
Q4, so 31st of December last year, all the positions on your balance sheet.
Yeah, we just did an episode on 13Fs, and I think it's a really interesting insight to get for a retail investor, because you can kind of see what all the big minds are doing, and it becomes pretty obvious that you don't need to be a crazy smart investor to produce a portfolio that's good returns, like we'll go through a few in a second, but Buffett, surprisingly as well, Apple.
Yeah, I think now, he actually shed a bit of his Apple, but 43% of the portfolio is Apple. That was 47%, but you'd imagine that they'd have, I don't know, not that much exposure, especially someone who's so focused on a wide range of diversified stocks.
Yeah, someone who said he wouldn't invest in tech companies because he didn't understand them. Now 50% of his US stocks.
That's the other thing. If you look
crazy.
at the sector breakdown of his portfolio, financials have been reducing in their weighting over the past 4, 5, 6 quarters, and information technology has been really growing.
What's his market? What is it now? 117 billion, I think, in Apple.
Right, that makes sense.
For the size of the position, and that's after selling, what was it, 57 million stocks or something ridiculous. So trimming the position, but I'm surprised it's 43% of his portfolio. That to me, like, I don't know if that's good portfolio management or not, but like,
no, but it's
almost
only
50%.
That's only his listed
US
stocks.
holdings.
Yeah. There's a lot of unlisted companies that give him some diversification.
Yeah.
The interesting thing with Buffett is how much is Warren and Charlie these days, and then how much is Todd and Ted, the two managers that have been tipped to replace them. Maybe the Apple purchase, selling down some of the the financials and the legacy stocks, is the new managers starting to come through and have some influence.
Makes sense that that's the case. I think they're both over 90 now. Probably closer to 100 Charlie is than he is 90. And I wouldn't be surprised if they're the ones calling the shots nowadays.
Well, we've never got to a Berkshire annual meeting, so we want to get to one in the next couple of years. Yeah.
Be an experience.
Some other notable ones are Bridgewater, Ray Dalio.
Ray Dalio is doing the same thing. He's selling down a lot of his gold positions. Gold was one of his biggest holdings. His whole fund holds the S&P 500, emerging markets ETF, and a lot of gold ETF. He's been selling down a lot of that gold as well.
I think you often hear large cap managers sometimes be criticised as index trackers, and it's why would you pay fees to track an index? when Bridgewater Associates' largest three holdings are 3 ETFs, an S&P ETF, an emerging markets ETF, and a gold ETF. That is literally index tracking.
Yeah, why would you be paying fees?
Yeah, I mean, they're so regulated and governed by their restrictions and what they can invest in that I suppose sometimes they have no choice, but there's a lot of stocks in those index ETFs.
Yeah. It's when, they have 160 billion assets under management or something.
Yeah.
There's not a lot of you can invest in at that size.
Scion Capital, Michael Burry. He's obviously always makes the news for pretty controversial reasons, and his big sell this year was GameStop.
Yeah, he was an advocate for years now. He was buying around the $5 mark, rode it up to 10, sold some, bought in again as it dropped, and he shed his whole position, it seems, by the end of last year, which you can't say he would have sold at the right time this year, but I'm sure he'll have his own personal thoughts on what could have happened, what could have been with that one.
Yeah.
I mean, he made one historic trade in his lifetime. If he'd held it until the top recently, that would have been the second one.
Yeah, and he's not shy to make predictions. If you look at his Twitter, he's always got a new prediction on what's going to change the world, what's ending the world. So he'll be right eventually again. It's just which one of his predictions
That's
is
how
right.
we stay relevant. You just got to make predictions.
Yeah, making massive predictions.
Make the predictions and see what
That's
comes
why
off.
we do bold predictions every year. So we could talk about all the fund managers that have released 13Fs, but we only have 15 minutes.
Yeah.
So Bryce, I want to ask you, were there any 13Fs that caught your eye?
Yeah, so I think for me the big standout was Bill Ackman. I just love how concentrated his portfolio was. I think he only had 7 positions that were reported and obviously listed, and he had the Chipotle restaurant group, Hilton, Lowe's. Yeah. So he was obviously taking big conviction bets on a small number of companies compared to someone like Dalio who
Owns them all.
Yeah, had all of them. So yeah, and I think the other big takeaway for me is that if you look at Dalio, for example, they're not doing anything special. They're literally tracking the index.
I mean, they're doing. They're
no, they're not doing anything special.
They're doing something special. It's just not with names that you haven't heard of.
Exactly.
Yeah.
They're not finding the small cap that we've never heard of. It's stocks that we all know and can invest in.
Yeah,
ourselves,
and can analyze most of the time.
Yeah.
It's big tech companies. It's consumer-facing brands. A lot of these companies are within most people's circle of competence.
Yeah. What about yourself?
Joel Greenblatt, writer of one of my favourite investing books, the little book that beats the market. His top 5 holdings: Apple, Amazon, Microsoft, Alphabet, Facebook.
Yeah. That is hilarious. He talks about the magic formula, and maybe that's the magic formula.
Well, I think once you scratch the surface, and this is probably a word of warning when you're looking at these 13Fs, is his fund runs a particular strategy, which is like an index plus. And so he overweights some companies in the index that he particularly likes, underweights some that he doesn't like, but basically it's index tracking. And so I first looked at his 13F and was like, this guy's just buying all the big tech names. But you scratch the surface, you realise that's actually on the label. That's the strategy he's following.
And I suppose when a lot of these funds own a lot of the same names, really you create your edge by executing your trades at the right time, being able to pile in without affecting the stock price, and then selling at the right time as well.
So let's move on. So speaking of index tracking and ETFs, the next point we want to talk about is obviously one of the hottest ETFs, well, I guess fund managers of the last year or so, and that is ARK. Their ETF, the Innovation ETF, was it?
All 5 of the biggest ARK ETFs, so the Innovation ETF, Genomics Revolution, FinTech, they make up for 32% of all trades on stake this year.
Wow.
Across 5 ETFs, yeah. So Cathie Woods has become a bit of a celebrity. Really, people are giving her the next Warren Buffett label, everything like that. But so far in the last 3, 4, 5 years, she's really performed, lived up to the name. I think all of her 5 major ETFs are up over 100% in 2020, and they've continued so far into the new year.
It's unbelievable. And I mean, for people who aren't familiar with Cathie Wood or ARK's sort of philosophy, maybe can you give us a little bit of an overview on what ARK is and why they've been so popular? Yeah,
so pretty much their whole investment strategy is based upon 4 or 5 pillars, and these 4 or 5 pillars, from genomics to 3D printing to general fintech innovation, is what she believes will govern the world in the next 4, 5, 6 decades. And really all decisions she makes are based on companies that comply with these pillars. So companies like Tesla, a lot of 3D printers are included in her portfolio, and instead of going the traditional value route or buying index ETFs, she looks for those high growth companies that should change the world.
And you mentioned that, so these are actively managed ETFs as opposed to your traditional index tracking which is obviously why they're able to give outsized returns at the moment. And I think the philosophy is to be 100% invested. And then trim these positions as they become too large. I think Tesla's only meant to be 10% of her portfolio and just keeps trimming. So God help if the market turns.
Yeah.
It's amazing as well because people are sort of using these ETFs as their passive choice. So I'm going to put $100 in each week, $1,000 in each week, but they're actively managed. And I suppose traditional literature says that really you should sit and wait and passively invest and not go for the active options. The S&P 500 is the best option over decades because it's passive.
Yeah.
I love what Cathie Wood's done. I actually own some of one of the ARK ETFs, but it just does feel like it's very in vogue at the moment because like that's what people want to invest in. They want to invest in the big tech and the Teslas and that part of the world. And in the 2000s, there was this fund, Janus, that was the same thing. It was everyone wanted to invest in it. It was hot. It was investing in all the hot internet stocks. The market crashed and Janus, I think, lost about 50% of its value. So that's always my reservation with ARK. It's like, I believe that their thesis is right, that a lot of these cutting edge technologies will define the next decades, but it's like, are they good investments at current valuation?
Yeah.
And you see what Tesla's done recently, stuff like that. And Cathie Wood's still a bull on Tesla. It's an interesting one. I mean, I own some of it, so I can't talk too poorly about it, but I own it with caution, I think.
Yeah.
Especially when you've got to be 100% invested all the time. It's hard to sort of take some off the table.
Yeah.
So to close it out, Alex, obviously the other hot topic at the moment is Bitcoin. Still flying. My prediction at the start of the year, bold prediction, was we'll see it hit 90 USD.
Good prediction so far.
Pretty good prediction so far.
Yeah.
We have
maybe
so
not
long
bold
to go.
enough.
Maybe not bold enough.
I think linked to that prediction is pretty much every asset in the world will sit at all-time highs by the end of the year as well.
True.
We're seeing everything from baseball cars to exotic cars hitting all-time highs, and Bitcoin's part of the show now.
Absolutely part of the show. And what we're starting to see is that there are certain instruments now becoming Bitcoin proxies on the market.
Definitely. So there's names like Riot Blockchain, Mara Payton Group, Square to some extent, Tesla, which are really trading. MicroStrategy is, I suppose, the biggest one, as a proxy to Bitcoin. So MicroStrategy holds about $4 billion worth of Bitcoin on its balance sheet.
Jeez.
It's a $9 billion company now. Before they announced any Bitcoin position, they were about a $500 million company. So
Wow.
a lot of this Bitcoin's being traded at a premium. I think Bloomberg did some calculations, and if you're buying MicroStrategy for its Bitcoin, you're paying about a 40% premium because really its pre-existing business isn't worth the discrepancy. But you ask what choice do a lot of funds have if they want to get exposure to Bitcoin. They're so mandated with what they can invest in, and a lot can't buy Bitcoin straight out, so they have to look to the equity markets to find exposure.
We saw we saw Elon tweet that he bought 1.5 big ones for Tesla. What happened to their market cap?
Yeah, so I suppose the first side of the story, which you hear heaps on Twitter, is that they've made, on paper, $1 billion from that investment so far. The other side is they've lost 10% in their market cap since that was announced, and that's about $75 billion. So interesting to see what the market really thought about that, but of course there are a heap of other factors that impact what the price did since then.
Yeah.
I think the profit that they made on Bitcoin in the last month since they bought it was more profit than they made selling cars last year.
Yeah, I think they've made 700 million selling cars, and their paper profits on Bitcoin are 1 billion right now. So,
Do you think this trend is likely to continue, where we see some of the larger Fortune 500 companies start to put a bit of Bitcoin on their balance sheet? A, maybe as a marketing tactic to push up their market cap, or B, because there's genuine sort of reason to do so?
yeah, I mean, for smaller caps, they definitely probably have that idea that if we had some Bitcoin, it's a good marketing tool. But for the larger caps, if they buy into the whole inflation hedge narrative, you see companies like Apple with hundreds of billions on their balance sheet ready to use. It wouldn't be that surprising, I don't think, to see them add a little bit.
I feel like there was a lot of talk on Twitter about Apple being next. Tesla's bought Bitcoin, Apple's got so much money, it'll be next. I feel the challenge in a lot of those boardrooms is convincing, the conservative old board members who have made a career of managing capital conservatively that we should put some of our treasury in Bitcoin. I feel like you need boards that are dominated by the likes of Elon Musk to get that
or
through.
one one-man ships like Michael Saylor's MicroStrategy, where he pretty much calls the shots.
Yeah.
And
Yeah.
at $500 million market cap, they can do whatever he likes.
Well, it didn't take long to convince our board to put
No.
Bitcoin on.
Equity Mates is chasing that inflated valuation. We put some Bitcoin on our balance sheet.
Yeah. Well, Alex, that brings us to the end of our conversation today. Really interesting points. If there's anywhere that our listeners, our viewers can go to find out more about what you're doing in as Chief Investment Officer at Stake.
Chief Insight Officer.
I'll take investment.
Yeah, investment. You just got promoted.
But twice, second time in one day.
The Wrap is the newsletter that you write to
Yeah.
sign up to.
Yeah, that goes out to a few 100,000 people around the world now. So if you head to the Stake site, you'll find all the details to sign up for that.
Nice. Well, that brings us to the end of our Equity Mates for the week. Hopefully you got something out of that episode that will help you on your investing journey. If you would like more information on Equity Mates, head to equitymates.com. Alternatively, you can email us at contact@equitymates.com. But otherwise, Ren, next week.
Yeah, next week we've got another big week. We're going to be speaking to more experts. We're going to have another Watchlist Wednesday. And we'll just be talking about companies and industries that are interesting to us. So hope you've enjoyed this week and hope you join us next week.